Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in this video, we're discussing 5 simple hacks to help you beat inflation and have your money work better for you. And Brian, I want to start this video off talking about how the Fed's efforts to lower inflation appear to be making things worse.
Yeah.
In the last year and a half, the Federal Reserve has raised interest rates 11 times, trying to reach that 2% target rate. And in doing so, they've brought rates to the highest we've seen since 2001.
Yes.
Inflation has fallen, though, from 9.06 in June 2022 to 2.97 in August of 2023. But this month, it just jumped back up to 3.67, which is a pretty big jump.
Yes.
Let's face it, though, 3.67% is way off compared to what we're feeling when we go to the grocery store, when we buy something, or even get in our car and go to work.
Right.
So what's happened is that now we have insanely high interest rates on credit cards and our mortgages, and we're able to get half the groceries in our cart than we did 18 months ago. So
Right.
what the Fed's doing isn't working.
No, it's not. And wages are still rising. We have record low unemployment and people are still spending. Okay. This could be due to the amount of stimulus still in the economy from 2020, the over 10 years of record low interest rates, and the spending bills Congress keeps ramming down our throats without cutting anything.
Right.
It's a proven fact that when the government spending increases, guess what? So does inflation.
Well, you keep printing money and you spend the money and you wonder why we can't get inflation under control. So
Yeah.
they raise the rates. And what this is doing is it's hurting the American people.
And it really hurts, Michelle, the lower to middle income people first
Sure.
every
Every
single
time.
time.
Yeah. All right. So let's get to it then. Aside from the obvious, like cutting back on non essentials or postponing big ticket item purchases, buying in bulk, and even growing your own food, how can people get their money to work better for them and beat inflation?
Yeah, all the ones you just mentioned are very good ideas
Sure.
and very common ones. But the first big one we're going to talk about today is investing in stocks or real estate. And here's why. Inflation leads to higher prices, which can increase the value of certain assets like stocks and even real estate. And when you're investing in these assets, they can potentially provide a hedge against inflation.
Yeah.
History has shown that good quality stocks have averaged around 10% over the long haul. So think about this. Over the last 100 years, the S&P 500 has averaged a 10.52% return with dividends reinvested and a 7.36% return with dividends reinvested and adjusted for inflation. But you need good companies that are still growing their earnings and also can raise prices along with inflation.
Sure.
The same deal goes for real estate. Today, rents are high and rising, demand's huge, and supply is still limited.
On the note of real estate, is it really a good idea to invest in real estate right now with rates so dang high?
This is when you need to think about the bigger picture. We're talking about beating inflation here. So the focus should be about the investment returns in the long run rather than solely on today's current rates, right?
Sure.
My question would be, do you feel real estate will be higher 10 to 20 years from now? If so, real estate today could be a great investment, right?
Yeah.
Plus, when rates decline eventually, and if you qualify, you could always refinance. Same
True.
thing with rents. Do you think rents will continue to climb to the point where you could increase your rents on your real estate each year to make your profits larger?
Yeah.
These are the questions you need to ask instead of focusing solely on today's interest rates.
It
So
makes perfect sense. Just zoom out, look bigger
zoom out
picture.
on it. Yep.
All right. So what's the next hack?
How about diversifying your portfolio? And one thing I'm going to talk about is commodities such as
Okay.
gold, oil, agriculture products, or even cryptocurrencies that can serve as a hedge against inflation.
Okay.
When inflation rises, the price of these often rise as well. During high inflation periods in the past, commodities generally have outperformed other asset classes. For example, let's take the early 1970s, when inflation spiked. Agriculture and metal commodities gained significantly in value. And this is what you're looking at today on the screen. When the prices spiked, they stayed in this trading range for the next 30 to 40 years. And Here's the problem. They never came back to the lower levels before 1972, did they?
Right.
So now inflation spikes again. My question is, are we in for another 30 to 40 years of higher commodity prices? Make sure you mull on that one for a moment.
Or leave us a comment below and let us know what you think.
Yeah,
There's that.
exactly.
All right. So I have a quick question for you on this. Have all commodities followed this trend of going up and staying up?
No. Let's take a look at wheat, for
Okay.
example. And I'll pull up the chart here real quick. Wheat doubled when the war in Ukraine started, right? A
Mm-hmm.
year later, wheat's back to the levels prior to the conflict. But did groceries associated with wheat fall back as the wheat fell?
No, they did not.
No. One trigger started long term food price hikes across the world. And they can blame the pandemic all they want, but the data's showing otherwise. You want the truth? Go look at the data and look at the actual numbers.
All right. Let's move on to the third hack to beat inflation.
Um, this is a good one and very common one. Invest in inflation protected securities like certain financial instruments such as Treasury inflated protected securities or TIPS here in the
Hmm.
United States. And they're designed to keep pace with inflation. The principal of TIPS increases with inflation, providing protection to those investors. But I got a word of caution here. After the Fed has raised rates so fast,
Yeah.
yields started to go in the opposite direction and TIPS prices have declined sharply. These are great for the long term, but short term volatility can lead to some losses here. So just be aware of that.
Okay. All right. Let's move on to the fourth way to try and beat inflation.
The next one is a pretty simple one. How about stashing your cash in high yield savings accounts instead of a regular savings account or a
Mhm.
checking account? This can help your savings keep pace with inflation. Do you believe that right now these rates are currently higher than the current inflation rate? 3.7 or 6.7% inflation rate versus 4 to 4.5% on high yield savings accounts.
All right. Do you think people should make saving a priority in a health savings account? Oh my gosh, a high yield savings
High
account
yield savings, yeah.
over paying down high interest debt?
Um, uh, let's put it this way: paying down debt is actually the fifth hack to beat inflation.
Okay.
So here's the thing: pay down debt can protect you from the impact of rising interest rates,
Uh huh.
which further erodes your purchasing power. So, rates on credit cards, variable rate loans, and even personal loans have risen along with the Federal Reserve rate hikes in the past year,
Uh huh.
since they're tied to the prime rate. When the Fed raises the prime rate, variable rate products like credit cards follow.
Sure.
So, to answer your question, though, about making saving a priority or paying off debt, well, you need to do the math and decide what's best for your personal situation.
Okay.
Here's an example. The national average APR in credit cards has moved higher than 20% as of September of this year.
That's
Up,
crazy.
yes, up from, and Michelle, that's for the best clients. Okay.
Yeah.
Up from 16.34% in March of 2022. So on a $10,000 balance, your monthly interest at 16.34% went from $135.18 to $165.70 at 20% rate. And for those at the 29% rate, your monthly interest only, I'm not talking about the principal payment,
Yeah.
is now $248.69
Ooh, so
on
much
a
money.
$10,000 balance.
So much money. Here's the thing. We're going to drop a link to a video that we did on withdrawing from your 401k to get your debt under control. I think this is a perfect place to insert this and plug this video.
Yes.
If you've got a 401k, then make sure to check that out. And also, while you're at it, if you like the content of this video, you find it valuable, hit that like button, subscribe, and leave us a comment. We'd love to know what you're doing to beat inflation. All right, Brian, I want to end with this question. What would you personally do to offset inflation today if you had to pick three things? What would they be?
Okay, let's start with this. Very first thing I would do is to build an emergency account using high yield savings accounts.
Okay.
Rates go higher, you benefit automatically. Second, I would only buy quality, profitable stocks that you feel that can raise their prices during this inflationary environment we're in. And third, pay down all that high interest debt like your credit cards and variable rate loans.
All right. Well, there you have it. Thanks for that. Appreciate it. Once again, if you like the content of this video, hit that like button, help us grow this channel, send this video to your friends. Don't forget to subscribe and do leave us a comment.
Definitely.
Right, well, thank you so much for this, Brian, and thanks to everyone who watched.
Thanks, everyone. Have a great day.